Hello guys, welcome back to my YouTube channels, and today I would like to discuss with you about the gap up and gap down. So before that guys, I request you please do like, share and subscribe my video. So now let's go and I will show you how gap up or gap down look like. See, as we can see that today market was opening gap up. Gap up means the market opened above yesterday closing price. See, market today opened with a green candle and they are above yesterday closing price. So this is gap up. And I'm going to show you the gap down. Yes, one more gap up. See, on this day, that is 25th of May, market was opening gap up with a red candle and the market opened above the closing price of 24th May. So this is gap up. And wait, let me show you the gap down. Yes, this. On 11th of May, market opened with a green candle and the market opened gap down below the closing price of 10 May. So this is gap down. Yes, on this day also, on 3rd of May, market opened gap down with a small green candle and the market opened below the closing price of 30 April. Okay, why this gap up and gap down occurs in the market? Gap up and gap down is happen because Nifty future was trading in Singapore exchange after our market close and even in the morning before our market open. So if the Nifty future was trading on positive side or is going up, then we might open a gap up. And if the Nifty future is trading on the negative side or is falling, then we might open a gap down. So guys, remember and note down these 3 points so that we will know how to trade when gap ups happen or gap down happen. First point is, if the market open gap up or gap down between these percentage 0.1 up to 0.4 percentage. Suppose if the market open gap up between these percentage, then there is a high probability or high chance that the market might going up. And if the market open gap down between these percentage, then there is a high chance that market might go down. And second point is, if the market is open gap down or gap up between these 2 percentage 0.5 up to 0.8 percentage. If the market open gap up between these 2 percentage, then don't take trade guys. The chances of going up or of going down from this percentage is very likely, which means that the market might face some problems either to go up or go down. So in this case, you better wait for the market or let the market settle, then we will take trade based on price action. And the third point, if the market is open gap up or gap down above 1 percentage or below 1 percentage, if the market open gap up more than 1%, then guys, in this case we have to check the past data or the history of the market. How did market behave? If the market was trading on the negative side for the past few days, and today, suppose if the market up and gap up more than 1%, then there is a high chance that those guys who short the market in the last few days, they might have to square off their position, or they have to cover up their position. Then it will take the market more on the upside, or which means the market, it might going up. And if the market in the past few days was trading already on the upside, or I means in the past few days the trend was already trending on the upside, then there is a high chance that profit booking might happen. Then the market will fall down. So same things, if the market up and gap down more than 1%, we have to see the in the past few days how did market behave, or how did the market tradings. We have to check if the market was trending on the upside, then today the market up and gap down with more than 1%, then there is a high chance that market might fall down little bit or some more. And if the market in the last few days was already trending on the downside, and today also was opening with a huge gap down of 1%, then there is a high chance that profit booking might happen, which means those people who short the market over here, then they will book the profit. And once they book the profit or cover up their position, then the market might go up. So now I'm going to show you the market in the past history. How did market behave when opens gap up or gap down? So now guys, I'm going to show you when the market opens with a huge gap down of more than 1%. On this day, that is on 3rd of May. On 3rd of May, market was opening with a huge gap down, and right after market open, it goes up. The reason why market went up after opening with a huge gap down of more than 1%, because we have to check, or we have to know in the last few days or the last trending days what happened, how did market behave. So in this last few days, market was trending on the downside, and these people who are shorting over here, who are shorting over here, they will have made a huge profit on this day, when market opens with a huge gap down. So when these people, they are booking their profit, or they are squaring up their position, then market is going up, because here they create a sell order. So once they exit, they became a buy order. So when the buy order is huge, then market is going up. See, on this day also, market opened with a huge gap down of more than 1%. Then right after market open, the market keeps on falling down. The reason why I told you guys, we have to check from the last few days how did market behave. So in this case, as we can see that the market in the last few days, market was trading sideways, look like range bound type. So the people here are lots of people who are going long, who thinks that market will go up, and lots of people also they are shorting the market. They thinks that the market will go down. So on this day when market open with a huge gap down, the market falls. The reason is these people who are going long here, means who bought the market, who thinks that the market will go up. Once the market open with a huge gap down, they face in a huge losses. So once they square off or they book their position, then it's became a sell order. Here the people who are going long, they create a buy order, and once they exit their buy order, it's became a sell order. That's why the market keeps on falling down. So now I'm going to show you some more example of gap up open with more than 1% on this day. See, on this day guys, the market opened with a huge gap up of more than 1%. Then right after market open, and after sometimes the market continue to go up. The reason is we have to check in the last few days or in the past few days, how did the market behave, or how did the trend, like how did the market behave in the last trading session, in the past trading session. As we can see here that market in these days, the market was trading sideways only, within the range of 50 to 100 points, and it's look like range bound tight. Then lots of people who short the market over here, who create a sell order, means they are shorting the market. Then what happened when the market is opening with a huge gap up? These people who sell the market here, they have faced a huge losses. So once these people they square off their position or they cover up their position, then it's became a buy order. That's why markets continue to go up. I'm going to show you one more gap up on these days also. Yes, see, the market on these days open with a huge gap up of more than 1%, and right after market open, the market continues to go up. The reason is these people who short the market over here, and these people who short the market, who create a sell order over here, or who short the market, once the market open with a huge gap up, then they have suffer losses, they have faced huge losses, so they have to exit the position. So once they exit their position, it's became a buy order. That's why it's take the market up. But on this day itself, the market is fall down. The reason is the market had faced some resistance. That's why the profit booking happened, because lots of people also who are going long on this day, and the market open which have a huge gap up and continue to go up, then they will have made huge amount of money. So once they book the profit, the markets fall. So I hope you guys understand, and please do watch once again the video so that you will understand how to handle the market or how to take trade once the market open with a huge gap up or gap down. And thank you guys. Bye bye.